Holy flippity flip flop flapping smokes, everyone! Michael Burry just made the biggest short position of his entire career. He said, "You have no idea how short I am," and people, he has come out with a new shocking prediction, and he's also given us some hope. He's told us what we can do to protect ourselves against the inevitable crash that is about to get even worse. Because for those of you that don't know, Michael Burry is the one and only Bear Lord. He's the man you've seen that predicted the 2008 housing market crash and the subprime mortgage crisis. He predicted the dot-com boom and bust. He invested in GameStop before it went crazy. He predicted the cryptocurrency crash that we're seeing right now, where Bitcoin has fallen 75% from its all-time high. And his last prediction, which will come true now, is the stock market indices being in a bubble. He's saying this passive investing, where people just invest in index funds, don't do any research at all, has led the indexes to become in a bubble, and some companies are being allocated capital that shouldn't be getting them just because they're in the index. And now he has come out with a new prediction, everyone. So this is going to be a great one because he's the man that we've all heard about. He's the man they tell tales about. He's the man that the children sing songs about. So everyone, what exactly is his prediction on how bad the stock market crash will get, and how can we also hedge ourselves against this crash to create huge amounts of wealth in 2023? Because remember, not all wealth is destroyed, it's simply transferred. Well, everyone, this is going to be an action-packed blockbuster, so let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, holy smokes, everyone, listen to this. Big short investor Michael Burry touts gold as a winner from the FTX fiasco and hints he's betting against the stock market yet again. So what we're going to do first is go over his prediction on how big this stock market crash will be, and then we're also going to fact check, I guess you could say, Michael Burry and see how well gold performs during times of high inflation. So spoiler alert, everyone, there is more pain to come. He tweeted, "You have no idea how short I am." Swear, everyone, that is a big statement. You have no idea how short I am. Well, what I think and what many people think and know is Michael Burry is now placing his biggest short of his career. So for those of you that don't know, fund managers only have to disclose their 13F filings for only US listed stocks every single quarter. But this does exclude shares that are short, overseas shares, and commodities. And Michael Burry has warned in May that the S&P 500 might bottom around 1,900 points. That's a 52% decline from its current level. And he's cautioned investors not to be duped by rallies in the interim. He also heavily sold his 165 million portfolio in the second quarter of this year. So okay, that's a big, huge prediction. So we have to check this. Could the S&P possibly fall all the way down to 1,900? And are these short rallies we're seeing right now, are they going to be sustained to new all-time highs? Or are they simply bear market rallies that are about to be sold much, much lower? Well, look at this chart of the S&P 500, everyone. We can see here in March, we had a rally of around 10%, and then it just dropped lower. Then we had another bear market rally of 17% from June to August, and then it hit a new low. And now we're in a rally of around 10%. So again, people, look at this trend here. We're bouncing and then having a low. We're having a higher low and then a lower low. This is a bearish trend. Now, also, if you look at the S&P 500 price to earnings ratio, that's the price of stocks compared to how much they're earning. Now the mean is 15.9 and the medium is 14.9, and right now we're at 20.6, so we still have another 20% to go just to get back to the mean. Also, another huge indicator of whether the stock market is going to crash lower is what the Federal Reserve does. Everyone's thinking the Federal Reserve is going to stop at 5% interest rates, or they may even pivot before then. No, people, this is not going to happen. And the question is, how high will they have to go? Because at first people thought 2%, then they thought 3% and 4%. But no, I've been warning 5% minimum, but they may have to go above inflation, or they may have to lift interest rates above the inflation rate, which could be 7 or 8% if inflation doesn't come back down. Because Fed Chief Bullard sets tone for Fed officials signaling hikes will roll on. So the Federal Reserve's not going to pivot. Stocks still are overvalued. Now also what we have to do is look at history to see what would happen even if the Federal Reserve did pivot. While people, history tells us stocks will still crash much, much lower. This is the chart here of the biggest stock market crashes in recent history. and when the Federal Reserve pivot, and then when the actual stock market bottomed. So we can see here, during our 1973 recession, the stock market crashed 41%, the Federal Reserve pivoted in October 1973, and the S&P didn't bottom until 1974, 11 months later. Also, the dot-com bust, that crashed 38%. The Federal Reserve pivoted in December 2000, and the S&P didn't actually bottom until 2002, 21 months later. And the most recent one, the Great Financial Crisis, 2008, the stock market crashed 50.1%, and the Federal Reserve pivoted in August 2007, and the S&P 500 didn't bottom until 2009, 18 months later. Because people, you have to be careful what you wish for. The only reason why the Federal Reserve would pivot now is if because there was some huge financial crisis or something in the financial system breaks. They're not just going to pivot because your stock portfolio or your cryptocurrency portfolio is down a little bit. The only reason they're going to pivot if we enter into a huge crisis. But again, that doesn't mean stocks are going to surge higher, because if we are in a financial crisis, well, that means there's going to be huge amounts of liquidations and huge amounts of margin calls. So again, when we look at history, the average decline is 28%, and the market doesn't bottom until 14 months after the Federal Reserve pivots. Burry reiterated his bearish stance in late October after stocks rebounded. He said, "Did you all just mishear a death knee as a starting gun?" he joked. So when we look at all the data, everyone, if the Federal Reserve keeps on hiking interest rates and they have to go to 7 or 8%, I think it is actually possible that we could fall another 50% from here, because there's going to be huge amounts of margin calls and we're going to see a flash crash. Now, do I think it's likely? I think the more likely scenario is would fall probably another 20 to 30% from here. And Michael Burry is saying there's going to be a flood of cash going into gold. Michael Burry said this is a golden opportunity, pun intended. Long thought the time for gold would have been when crypto scandals merge into contagion, Burry said in a now deleted tweet on Tuesday. He was almost certainly referring to the financial pressures spreading across the crypto industry that have hit Sam Bankman-Fried collapsed crypto exchange FTX. They've also weighed on the likes of Celsius, Voyager, the Winklevoss twins Genesis, and BlockFi in recent weeks. So that's right, everyone. What I expect to see is a lot of these crypto bros, they're going to turn into gold bugs, because they've found out the hard way that gold is a real store of value and Bitcoin and cryptocurrency is not. It is just simply a risk-on asset. When money is loose, financial conditions are loose, interest rates are low, there's lots of money printing, that is when you want to get into cryptocurrency and Bitcoin, when there's lots of speculation for short-term profits. I wouldn't hold it for long-term, because again, we'll see another crash during the next bull market like what we're seeing now. But in the short term, you can make money on it. But again, a lot of people are going to be turning to gold, because guess what? Even though gold isn't booming, it is outperforming every single asset class. Because look at this, gold is only down 3% over the past year. But if we go to the S&P 500, it's down 15%. And what they said was the ultimate inflation hedge and the store of value, Bitcoin, is down 72% over the past year. Now, cryptocurrency market cap hit a peak of around 2.8 trillion. Now it's had about $2 trillion wiped out, and I expect we could see at least 500 billion or $1 trillion pumped into gold as things start to really hit the fan, and that's going to send the price of gold soaring. Now, I don't just want to give you speculation, hype, hopium, everyone. I want to back this up by data. So I wanted to know what happens to gold during times of high inflation, and people, the returns are very handsome indeed. In modern times, gold has served to protect wealth through periods of high inflation, most notably throughout the 1970s, which is what they keep comparing today's time to, like the 1970s and 80s during times of high inflation. So this chart shows you that during times of high inflation, above 3%, the nominal return of gold is 15%, and it has a real return of 8.3%. Now again, you may be thinking, well, we've had high inflation, but gold hasn't boomed. Now the reason for this is because the DXY has been on a huge rally. When the dollar goes up, all commodities priced in the dollar go down. But now that the DXY is flattened out, I expect gold will start to slowly climb higher and higher. And I think gold won't really boom until there's huge amounts of fear in the markets. Like what we saw in 2020 when gold and silver skyrocketed, when there was peak fear. I expect this is going to happen when we enter into an official recession and we enter into stagflation. People are simply going to come to terms with that stocks and cryptocurrencies are not a real inflation hedge, and they're not a store of value. The real asset that's been proven throughout time and history over 5,000 years is gold and silver, and it'll continue to remain the case. Just listen to this speech from former Federal Reserve Chairman Alan Greenspan about how gold is still the best currency throughout history and is still better than the US dollar.
Gold is a currency. It is still, by all evidences, the premier currency where no fiat currency, including the dollar, can match it. And so that the issue is, if you're looking at a question of turmoil, you will find, as we always have in the past, moves into the gold price. It's also got a monetary characteristic which is intrinsic. It's not inbred into human beings. I cannot conceive of any mechanism by which you could say that, but it behaves as though it is. Intrinsic currencies like gold and silver, for example, are acceptable without a third-party guarantee.
And just like Alan Greenspan, Burry's now suggesting this as well. Burry's likely suggesting that a cascade of crypto fiascos will undercut demand for tokens and could spread to other asset classes, making gold an attractive holding for investors scrambling to protect their wealth. So I know what you're thinking, well, okay, what does all this investment and financial jargon mean for you in simple terms? What this simply means is, everyone, the fundamentals, the technical analysis is telling us that the S&P 500 has not bottomed yet, and famed investors like Michael Burry has predicted every single crash, and you may say, well, you know, he's a broken clock. No, people, he's not a broken clock. What happens with the clock is the government and the central banks keep tampering with the clock and changing the time. The warning signs have always been there, but they've kept kicking the can down the road. But now that we've got surging inflation, they're not going to be able to kick the can down the road this time. The party's over, everyone. It's time to face the music and pay the bill. So like I said, the S&P 500 could potentially fall another 20 to 30% from here. Michael Burry is saying it could fall another 50%. That will be in the worst case scenario, I think. And if you want to protect yourself, this is not financial advice, it's what I'm doing. What Michael Burry is likely doing now is a real inflation hedge. The real store of value is gold and silver. But everyone, what do you think about this? Do you think Michael Burry will be right? Are you buying gold and silver right now? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.